Hey there, and welcome to another episode of MaloneBailey's official podcast, Everybody Counts. Thanks for tuning in today. I'm Caroline Rosen, and I'm from the marketing department here at MaloneBailey. For those of you who aren't familiar with us, MaloneBailey is a CPA firm based in Houston, and we are among the top 11 CPA firms worldwide that represent over 100 public company clients. So we have this podcast, Everybody Counts, which features various perspectives on a variety of topics. So from the latest SEC and FASB updates to discussions on soft skills, practice management, and much more, this podcast explores trends and hot topics that affect us and those in our business. We invite you to tune in to hear from partners and staff alike. The conversation is versatile and everybody's input counts. Today's podcast focuses on a really interesting topic, and I'm delighted to be joined by a special guest who I'll introduce in just a moment. We want you to know that this podcast is part of a three-part series that focuses on the process of uplisting or upgrading between market tiers. This series will feature interviews with representatives from OTC, NASDAQ, and the New York Stock Exchange. The entire series is available on our website in the resources section at www.MaloneBailey.com. It's a really important topic because we often get questions about the process, what it entails, and what a company should be mindful of when moving from one exchange or tier to the other. So joining me to discuss the topic of uplisting to the New York Stock Exchange is Paul Dorfman, who is the Director of Capital Markets at the New York Stock Exchange. Welcome, Paul.
Thank you so much, Carolyn. Very happy to be here talking on the MaloneBailey podcast.
Well, we know that you're extremely busy, and we really thank you for carving out some time for us today. We've been looking to having you on our podcast. I was reviewing your bio, and it looks like you're one of us, somebody that holds an accounting degree.
Yes, I am. Very good. I am. Many years ago, I got my certification, my CPA, so I'm an inactive member of the AICPA and New York State Society of CPAs. So those were some really great years. I learned a lot, and it's really served me well.
So before we dive into the conversation, please tell us just a little bit more about yourself and your role at the New York Stock Exchange.
Of course. So I've been here about 8 or 9 years at the NYSE, also known as the Big Board, and my job really is to educate, right, and inform companies about the capital markets, but I focus on small cap companies, not the very large one, not the large cap. We call them small cap, micro cap, anything really under a couple of 100 million. I talk to entrepreneurs and their advisors, their, of course, accountants like MaloneBailey, and lawyers and IR firms and bankers, of course, and the executives themselves, and teach them and talk to them about the advantages of being listed on a national exchange, and of course the advantages of being listed on the NYSE American platform, which is our growth company platform.
Okay, wonderful. So let's talk a little bit about the New York Stock Exchange in general. Can you give us an overview of the exchange as well as its listed companies?
Indeed. So we have a tremendous variety of companies from hundreds and hundreds of billions. So we're all, of course, getting close to the $1 trillion mark here, which is scary in 2018 in terms of market caps. But we go from there, but we go all the way down to micro caps and talking tens of millions in market caps. So huge range. And I focus on that smaller end. But we have close to 3,000 companies. We trade at the NYSE well over 1 billion shares a day. The value of all of our companies is probably 30 trillion or so. And we have companies in every single sector you could imagine, in every size in every sector. So it's energy, and it's high tech, and it's pharma and biotech and consumer goods, and REITs and everything, and manufacturing companies that have been around for hundreds and hundreds of years, and also companies that have been around for just a couple of months. So new and old, large and small, every sector, and they get a great market here. All
right. Fantastic. So when a company comes to you and says they want to make a change, what are the most common reasons a company decides to uplist to the New York Stock Exchange?
Great. And really it's all around largely capital raising and all the wonderful things and being on the national exchange, right? It's those things that come along with it. So of course, these are entrepreneurs, they're in growth mode, and they're very hungry for capital. It's not easy for small cap companies to raise capital. So part of the reason they come to us is that when you're looking to raise capital, it's often easier to go and do that when you're on a national exchange, or that capital raise is part of an uplisting onto a national exchange. In other words, raise the money in conjunction with a listing. So it's getting that money, right, into the treasury there, having a great plan and budget and projections of what you're going to do with that and the worlds that you're going to conquer with that money. And then, of course, you also, while you're on a national exchange, in addition to having the money, by being a reporting company and a public filer on a national exchange, you have the advantage of having more institutional investors and more investors of all types coming into your stock, being available and allowed to buy your stock. So it's about getting the money. It's about being eligible, right, by more institutional investors to buy your stock. And it's about the credibility of being on a national exchange. So if people want to do their due diligence about you, the company, they can go and find out information very easily through their SEC filings. And they also have the comfort to know that this company has met the standards to get listed on NYSE American, or NYSE for that matter. So that's why they do it. Credibility, visibility, capital raising, really sort of being out there and being taken more seriously.
Got it. Okay. So let's talk about standards. What are the criteria a company must meet to uplist to the New York Stock Exchange?
Right. They're varied and wide ranging, so I won't go through every single detail, but the main thing we look at is, does the company have the wherewithal, right, to be a going concern? Not in our traditional accounting language where you have a going concern opinion, which is not a good thing, but to actually be a going concern. Do you have the capital? Do you have the cash? Do you have the shareholder equity? Do you have the balance sheet, right, to run your business for a period of time, right, once you get listed? And even more importantly than being listed is running your business as a going concern, an ongoing enterprise. So it's about capital, right? That's the most important thing. We also look for companies to have some distribution in the ownership. So you can't be a wonderful company with $100 million in cash, but have 3 shareholders, because it won't trade. It's not, that kind of stock is not suitable for a public national exchange listing. So you've got to have 400 total shareholders, right? You have to have enough cash, right, to sustain a listing for a period of time. So typically the things to think about if you're listening to this is, do you have 4 million or plus or more in your shareholder equity? Do you have cash to run your business for a year and a half? Do you have 400 holders? Is the value of your company going to be at least $50 million if you have a $2 stock price? Or will the market value of the public float of your company be $15 million if you have a $3 stock price? So I think if you're hearing this, you can get a sense of the scale we're looking at. 50 million market cap or $15 million value of float with a $3 stock price. So and we have 4 criteria, Caroline, and you only need to meet, as a listed company, one of them. You don't need to meet all 4. So you need to have income, pre-tax income, we'll call it that, and you don't need to be as large. Without that pre-tax income, you need to be a little bit bigger. If you don't have shareholder equity, there may be an option for you as well. And I mean literally shareholder equity on your balance sheet. If you don't have that, there may be a way to get listed on NYSE American as well. But you need to be even bigger than, let's say, the 50 million market cap. So stock price, holders, cash, and of course you have to have a business. You can't just be a pile of cash. All right, a bank account with a lot of cash looking to go and do something, to go buy a hotel, or to acquire a company. That is something that doesn't work. We'll need to have a company, of course, as an operating company. Even if you're young, you can be young, but you have to be operating. So that's the kind of things we look at.
Okay, wonderful. And so moving on to process, what does the process look like if a company wants to uplist to the New York Stock Exchange?
Right. The first thing that a company should do, of course, in the process, have good advisors like MaloneBailey and a good law firm, right, and a good banking type firm, financial advisor, so that they can give you guidance, so that when you come to us, you're in better position. We can't work with a company, or certainly list a company that doesn't meet the standards. But certainly not everyone shows up to us, right, meeting those standards. They come to us with a plan, and there's the process. And even then, look, if they meet the standards, there's a process as well. But basically, let's assume the company meets the standards. It's like Steve Martin had the great line, right? How to retire with $1 million. And he said, first get $1 million. Okay, there you go. And then retire. So to paraphrase Steve Martin from 30 years ago, first meet the listing standards. And of course, I can help you. I can help guide you on how to go about doing that. But assuming the company shows up here, wants to list, meets the standards, awesome, right? Here's the process. What we'll do is we'll do a preliminary review to clear the company. That means we look at your S1 or your last 10K or your 10Q, and we do an analysis. So up front, once the company expresses a desire to list, we analyze the company for the standards. Do they have the equity? Do they have the price? Do they have the holders? All of these things, right? And we're confirming the kinds of things that you're saying you have. Once we confirm it, and we do a regulatory check and a compliance check, meaning background checks on directors and officers and 10% holders. Once we do this review, you meet the financial, you meet the governance, you meet the regulatory and compliance. We then clear the company. So far you've done very little other than tell us you want to list. We do all the work. Once we complete that work, we clear the company. What do we clear the company to do? We clear the company, the applicant, the prospect, to apply to list. We clear you, we send you a clearance letter, right? You then apply. The application is very simple. It says we agree to list, we agree to list these shares, we attest that we meet your standards. Basically, 1 or 2 page document is the application. Very quick, very simple. We review that application, we then authorize you, and a few days after that, we start trading. So a company, Carolyn, that came to us today and said they meet the standards and they want to list, we could list that company in 4 weeks. It's a bit of a 2-week period up front while we do that review that I talked about. We then clear you in week 3. You then file your application later in week 3. Again, that's a quick process. And then you begin probably at the end of that week or the middle of the following week. One of the things we do in terms of the process that's unique to the NYSE, no other equities market has this, is each company gets to select their own designated market maker. No other exchange offers this. And this designated market making firm is a broker-dealer that operates on the floor of the NYSE. You get to pick a firm, and that job of that firm is to help ensure orderly trading in your stock, right? So their job is to be a buyer and be a seller, just like all the other traders in your stock and all the investors and all the other participants. This is an adjunct. This augments the liquidity. Their job is to help narrow quote spreads, this DMM's job, designated market maker job, bid higher, offer lower, narrow quote spreads, reduce volatility. Again, unique to the capital markets. That's part of the process. I mentioned only because one of the steps in this process is to interview and select that firm. It's a lot of fun to do, and you end up usually almost all the time with a great relationship on the floor of the NYSE. And this team, this market making firm, helps you trade well. So that's part of the process, and that's really what it is. And then once you get authorized, I'll just finish it off. In that 4 to 4.5, 5-week process, you get authorized, and then you start a day or 2 after. And if the market, if it works, you come in, you ring the bell as part of that process. So it's really a lot of fun. So at the end of the game, it's very cool. Ring the NYSE bell, this iconic bell at Wall and Broad, and you are a member of this illustrious community.
Cool. Very neat. So what do you hear in terms of the common challenges a company might encounter as they navigate the uplisting process?
Yeah, the most common challenge really is raising the needed capital. It's really, I mean, there can be any number of challenges. Getting your stock to $2 or $3. Do you do a reverse split? Do you organically wait to let it go? If you want to do a reverse, when do you do the reverse split? At the time you list, you have to do it a week before, all of these things. But really it's about raising capital, right, at a valuation that the company is willing to raise capital at. Like anyone can raise capital. If you say you're going to raise capital at a penny a share, sure, you can raise a lot of money, right? Perhaps. But with the valuation and the amount of money you need, that is the challenge, getting the bankers, getting the investment community, getting the company all to come together and have some money come into that company, whether it's a private raise, right? Whether it's convertible preferred, whether it's straight common stock, whether it's done before you uplist, or whether it's part of an uplisting like an IPO. That's the challenge, getting the capital in at a fair valuation on terms. Also, sometimes it's getting shareholders. Some companies are closely held. They have only 50 shareholders or less. We'll need them to have 400 total shareholders. Not always easy. Certainly, if it's part of a public offering, it's a little easier because that's part of the parcel of an IPO or public offering to bring in shareholders. But sometimes companies are a little constrained. They're closely held, right? And then we talked about stock price, bringing in capital, getting the distribution of those holders, right, the 400, getting 1 million shares in the float as well. That's another thing that you need to do. And then sometimes, again, it's getting that stock price up. How do we get it from, you know, $1 or 50 cents or 2.50 to $2 or $3, the prices we need. And then, you know, and then there's, you know, to some extent it's easier in governance. You know, you get your board put together. We need a majority of independent. We need a majority of the board to be independent, unless you're a smaller reporting company, right? That kind of a thing. In which case you only need to be 50%, half majority, half independent, I should say. And it's really, it comes in those areas for the most part.
Yeah. Okay. All right, great. So words of wisdom from Paul. What advice do you have for a company that is considering an uplisting to the New York Stock Exchange?
Yep. Consider it, first of all, only consider it if you're ready for prime time. And that means, do you have a real company? Okay, right? Is there an ability to, look, if you're biotech, you're not generating revenue, perhaps that's fine, right? You know, are you an operating company? Is it a real company? Do you have a good, solid, real plan to generate revenue and at some point cash flow and at some point pre-tax income, right? All of those things, that reasons we form these companies, right? Not just to keep busy. So when you have that real company, right? You know, the next thing you want to do is have a good set of professionals around you as well, right? You want to have the business plan, of course. You want to have a good banking firm. You want to have Malone&Bailey, right? You want to have, you know, you want to have a law firm that knows the process. So very important to have a company, have a good set of professionals around you, and be ready also to be a public company. Because as soon as you hit the public markets, as soon as you're listed with us, you ring that bell. You've got to ready to do that first quarterly conference call that's coming up in some number of days. You have to hit the ground running. You have to have all the governance. Well, we'll make sure you have the governance, but you have to have a plan. You have to have an investor relations strategy. You know, do we issue you know, forecasts and projections? Do we play close to the vest? Do we hit the road and do a lot of marketing, or do we just spend all of our time running the business? You know, you want to have sort of a sensible middle ground there, of course. You can't do just one really without the other. But if you have to do just one, of course, run the business. So be ready to be a public company. There's a lot asked of you. It's expensive, right? And you are now owned and to some extent controlled by people you don't know, right? Someone could sneak up and take a big percentage of your ownership. Somebody could write a report, positive or negative, on your company. Be ready for all of these things because they're going to happen. And then, of course, back up again, have that real company so that you can, you know, ride this out. If you have short selling, a bear rate, a negative report, product failure, make sure you have capital right there. Make sure you have capital to burn, a real company, great set of advisors, and be ready for that first quarterly call and have a plan as to how you'll communicate with the street. And we, of course, the famous thing is we do the rest. Here, right? So what is that? We manage at the NYSE an incredibly complex trading platform and market structure here. We do this, we run these markets so that our companies can run their business. And this is like, it's all invisible to so many people, you know, and they think, well, what is it? Just ring the bell and we trade. It's extraordinarily technical, extraordinarily complex, highly regulated, right? We have to be right all the time, no fail rate, a lot of redundancy. And that's what we do. So you don't have to do that. So it's kind of funny. You have a lot to do and we have a lot to do, but our part is not visible. When you meet me, you won't know we do all of these things in the background. But we run these modern markets that are cutting edge and require a lot of investment. And to get a stock to trade, not a simple thing today. The investments, you know, resources we commit to this are extraordinary. But those are the advice, right? Real company, be ready, have a great set of advisors because you're going to be public.
All right, great advice. So where do you recommend companies go to find more information, or who could they speak with at the New York Stock Exchange to ask questions about the uplisting process?
Cool. Well, we recommend you come to the Land of Oz at the New York Stock Exchange, which is a great place. There's no better place to learn about being a public company than at the New York Stock Exchange. We're at the corner of Wall and Broad, and we've been here since 1792. Caroline, a long time, 226 years, right downtown Manhattan, where it all started. We call it the room where it happened. So you can certainly come here, 11 Wall, again, is our address. But if you can't make it here, you can, of course, contact me, through an email. And it's very simple. It's paul.dorfman. And I just like to have it very personal instead of giving you a generic email. It's paul.dorfman@nyse.com. So that's paul.dorfman @nyse.com. Shoot me an email. Let me know you listen to this, and I'd be happy to talk to you about anything you like as it relates to small cap and being public.
Well, thank you for sharing your contact information, and thank you so much for sharing all of this important information about uplisting to the New York Stock Exchange. I know that so many of our clients and those who operate in our space will find this extremely useful. Now, I have just one or two more questions for you, Paul. This is called our This or That section. It's a surprise section towards the end of our podcast. We're going to switch gears a little bit. And this is where our guests choose between two options. The topic is completely unrelated to uplisting. So shall we dive in?
Let's.
Okay. I hope you find this fun. We're actually going to talk sports. And
I
since you're
love
a New Yorker, we're going to focus on teams and players in that area.
Okay.
So, who do you root for, the New York Knicks or the Brooklyn Nets?
It's really tough because both of them are challenged teams at the moment, but I have been a long-standing 45-year Knicks fan through good times and bad times, so I would have to say the Knicks.
The Knicks it is. All right, so when it comes to baseball, the Mets or the Yankees?
I'm a Queens boy, so New Yorker, of course, and grew up not too far from what we used to call Shea Stadium. So I would go to the more Mets games than Yankees games. Yankees, of course, in the Bronx, which is great. But I am a Mets fan if I had to pick between the two. So, I go way back with those guys as well, back to Gil Hodges as the manager and a great team from '69 and early '70s. Okay.
Well, your pal Jason Paltrowitz also is a big Mets fan. I don't know if you knew that.
No, I didn't know that.
But I learned.
Good. We actually have something we agree on then.
Yeah. All right. So
he's a great guy.
One, yeah, he is. Last one. Moving on to the topic of famous New Yorker athletes, Babe Ruth or Yogi Berra?
Well, wow. Okay. I don't know. I mean, the Babe is the Babe, right? So he's bigger than baseball. He's bigger than sports. Right, he's one of the all-time, great Americans, I suppose, regardless of whatever he did. Could have been a politician. So, Yogi is amazing. Sort of a little more contemporary. He was alive just until recently, and amazing. So I would have to say Yogi Berra. I mean, the sayings, right? I mean, my goodness, the Yogiisms. It's just are irreplaceable. Yeah. So Yogi was an amazing guy, and I think a great person. Of course, I didn't know Babe Ruth. Not that old.
You have a favorite Yogiism?
There's so many. I like the one where he says, I'm paraphrasing, he goes, "It gets late really early around here." He says, "The restaurant is so crowded, nobody goes there anymore." Right. Okay. He said, "When you when you come to a fork in the road, take it." Take it, right? Oh my God, he's got so many. What else? It's like deja vu all over again. Deja vu all over again. I know. I'm sure for you this call is. But I don't know how he came up with those. I couldn't if I tried. Yeah. They're he was a treasure. Thank you for playing along, Paul. I know that was a little unexpected, but we like to keep our guests on their toes with our This or That section. Yes, I am dancing in my conference room here at the New York Stock Exchange. I'm so excited. It's so cool. Well, as we wrap up here, everyone, please be sure to check out the New York Stock Exchange online. It's www.nyse.com. You can find lots of great resources on the site. Right. And again, Paul, thank you so much for taking time out of your busy schedule to speak with us today. We hope to reconnect with you again in the very near future. Carolyn, it's been such a pleasure. You're wonderful, and I look forward to working with you and your team, MaloneBailey. I'm always open for calls from anybody, of course. Thank you, Paul. Thank you so much. We'll have a great day.
So to our listeners, thank you so much for tuning in today. We hope you found the conversation to be insightful and resourceful. And as always, I invite you to check out our website, www.MaloneBailey.com, where you can find other episodes from our podcast, as well as past versions of our newsletter, which contains lots of great SEC and FASB updates and much more information about our service offering. Thanks again, and we'll see you next time.